Hey everyone, it's the launch day for the spot Bitcoin ETFs. We've got Nate, my co-host, going forward. We've got James, our lead analyst, and we've got special guest Alex from SwissBorg. Alex, it's been a minute. James, how are you both doing, guys? And are you excited? I know, James, you were telling me you were shaking this morning.
Crazy. You said you were expecting it. I was maybe expecting it, but I just want to be a bit conservative. So it's been a ridiculous 2 hours. Let's hope it continues throughout the day.
How about you, Alex? Are you excited? Obviously, you've got your own exchange. How's it been from that side of it?
It's been amazing, man. And I still managed to find an old tweet from October 15th, 2021, when the NASDAQ were submitted the first Bitcoin ETF. So it's been a long ride since the very first applications all the way to here. And I'm just, in terms of the history and the narrative behind this, what I love the most, guys, is the people managed to front run Wall Street.
I know, right? Nate, what about you? How are you feeling?
Yeah, I'm feeling great. This is a day we've been talking about for a long time, ever since Matt and I first bought Bitcoin back in 2015. And with all of Gensler's actions over the past few years, I was really surprised last night to see that he was the tiebreaker for the approval of the ETFs. For everyone's negative feelings about Gary, like Gary actually did us a big one here.
Maybe. I think he didn't have any room to wiggle out of it anymore. I think that legally, when you read through the filing, he basically said that everything had been dealt with that they'd raised issue with before, and therefore they will pass it. He's still got his little dig in there saying that Bitcoin is primarily used for illicit activities and all these things. Bittersweet. I hear what you're saying, but I'm not sure I quite agree. And especially given all the other things that happened over the last 24 hours, without no two-factor authentication on the SEC Twitter account. That is literally against their own regulations. But what I wanted to just start with quickly from my point of view, what I find really interesting, was going to pull this article that I put out this morning, which is one of the things that people have been looking at a lot with the idea of a spot Bitcoin ETF is going back to 2004, and people have been showing that chart that shows the price of gold fairly flat until 2004, and then it rockets up. And I think one of the things that's really interesting, if we just skim through here, we can have a look at, is firstly, this is the seed capital here that has been put into the combined spot Bitcoin ETFs today, which totals 114 million, I believe. And if we look here, on 2004, 115 million, sorry. And on the first day of trading, GLD acquired 115 million in assets under management, meaning as soon as, obviously it's combined, but the Bitcoin ETF market was officially bigger than the gold market on day one before they even opened trading, which I thought was fascinating. But then I thought this was really cool to look at. I went back through to look at this as a day time frame. Like this is here where the gold ETF launched, and it went up for about 12 days, and then it never reached that point again for over 6 months before it reached that peak. And then what was this? This is 6 months later. See, it's down. And then here we go. I think it's 2 years later, it's finally up a decent amount. And that was like 8%. And it takes a while before you get to this sort of staggering 356%. But I think what's interesting is if Bitcoin were to go up 356% from now, we'd only be about 200K. And if Bitcoin is 210K in 2044, how many people on this call would actually be happy with that price? Because I feel like people are expecting Bitcoin to be a lot higher in 20 years. So I think that the potential of, if we were to run up on a similar time frame to what the gold ETF did, I actually think we'd all be quite disappointed. But then have a read through this article. It's live on CryptoSlate right now. I then go into some more detail around looking at gold related to the M2 money supply, and then comparing that to how Bitcoin compares to the M2 money supply. Then looking into all the other aspects, which are like digging into numbers around Bitcoin, obviously having only several million coins actually liquid, the fact that it's got fixed supply compared to gold, all of these things to point to my prediction as to why I think this is going to be actually way bigger than the gold ETFs. And then just before you guys will chime in, I thought I'll just bring up the chart of, this is BlackRock's ETF today. This was the launch price. This is the price it opened at because of pre-market. And this is where it's currently at. So it's currently technically down 5% from when it opened, but its initial price was $25. So pretty wild. And this is one of the things that I thought would be interesting as well is, so this is an indicator that I have on all the time, which is correlation to Bitcoin. And I have this for literally every asset. I think it's quite fascinating on 20-minute candles on close. The correlation with the actual Bitcoin price is not very strong right now for BlackRock's ETF. And obviously, they're going to be buying Bitcoin at the end of the day. I think it starts at 3 p.m. I've got a feeling with the volume they've done 24 million shares in volume. They only made 400,000 shares in cash creates before today. So I currently think that this is my point of view, just looking at live analysis. I think this is trading at a premium to the Bitcoin price right now, meaning that there's going to be some really interesting arbitrages with the APs after the market's closed today. What do you think, James?
Yeah, that 24 million, I think it has a corresponding value of just definitely over 650 million. But yeah, it's fascinating how I can't answer the premium or discount the ETF to the price. But looking at the volume of Eric tweeted about 15 minutes ago, BlackRock, yeah, they've got about 650 million. The top 10 ETFs have seen 1.3 billion in trading volume so far. 2.3 billion if you're adding in GBTC, and then 3.5 billion if you're adding BITO, the futures ETF as well. So it's quite incredible seeing these numbers. And then if you are right, the spot buying goes in after 3 p.m. onwards.
Yeah, according, at least on BlackRock's filing anyway, they can place the orders up to 6 p.m. to 8 p.m. Sorry, ET, which is when the deadlines are for getting their orders in. I've just changed it. So the wave chart I've just overlaid this on. This is actually the Bitcoin price, the high and low for each spot. And if you try and overlay them, it seems pretty clear to me that we're trading above the Bitcoin price.
Yeah, I think this will probably take a couple of days, weeks to iron out. So yeah, there's arbitrage opportunities. There's been arbitrage opportunities on different exchanges with premiums on Coinbase and Binance. But I do expect it maybe to settle over the next couple of weeks. We were talking before of why Bitcoin was bleeding. Was it the capital rotation out of GBTC at 1.5% fees going into other ETF vehicles with lower fees? Or will they necessarily go into the ETF fees, or will they just take profits? But again, I think you had a good point in terms of buying and then selling at certain times. So I think all of this becomes a lot clearer over the next couple of days and weeks.
Yeah, I think the authorized participants like JP Morgan, who still doesn't believe in Bitcoin, is going to be making a lot of money after close with the arbitrage between the premiums and what's actually going on. Have you got any thoughts on this, Alex? From how much do you get involved with kind of like arbitrage between exchanges? I know SwissBorg obviously does pricing across multiple exchanges. One of the reasons why I use it as my main exchange is because I love how the transactions work across the different exchanges to get the best price. Does this change any of your kind of functionality, having this extra kind of arbitrage element in it?
Yeah, it's a really good question. I mean, for me, in terms of what I'm seeing in the market, like right now, I think both you and James mentioned it really well. It's really hard to see the impact of money flowing into Bitcoin through the ETFs because there are a lot of people it's already priced in, right? People are anticipating. So I think for the first few weeks, it's going to be difficult to really see. Maybe some are selling the news. Maybe some are accumulating the news, it's a really weird market cycle, right? Because in crypto, one thing that's really funny, guys, is there's so much BS, right? That we tend to actually buy the news because we don't trust the anticipation, right? There's a lack of trust and a lot of people playing with cool buzzwords and overhyping everything. It's a very interesting narrative. What I'm looking at mainly, guys, is the research that came out just about a month ago was saying that roughly across the 11 or 12 ETFs that are being submitted and improved, roughly $600 to $700 billion will be poured into Bitcoin over the next 18 to 24 months. Now, why do I like that metric a lot, guys? It's because there was a study, I don't know if you saw it, it's CC15 Capital, shout outs, that did a study with the Bank of America. And as you guys know, Bank of America is a multinational investment corporation. It's a massive corporation with very strong research. And long story short, if we have $600 billion pouring into Bitcoin, which, by the way, the market cap right now is $980 billion. So it's almost the entire Bitcoin market cap of money flowing into this beautiful asset. But based on their calculations, they were saying roughly that with $93 million of Bitcoin inflow, the Bitcoin price will go up by 1%. And so for every $1 billion flowing into Bitcoin through one of these ETFs, that will increase the Bitcoin price by 10%. $1 billion, 10%. We have $600 billion planned to inflow into Bitcoin. Now, that is if no one sells, right? So that's just pure inflow money. We don't know how the resistance levels will be. But I think that's a fun metric. I don't know how you guys feel about that. But if you technically take those gains,
Mixed.
the future's
Me
bright.
and James have James have debated that metric at length. At length. I think it's really interesting. I think what you said is really clear there in that it's with no order book, then those numbers start to make sense. We then started trying to dig into order books and see what sort of really effects it has. And obviously there's so many factors in play. But I do it's an interesting metric, but I think some people have tried to present it, unlike you have, of being like, this will happen if we get this in. No, but there is a multiple there that's interesting. I just wanted to quickly pull up this again on exactly what you were saying, because I calculated today in my article that I think there's only between 290 and 5 billion liquid coins in the market. When you look at, this has come from James's research, when you look at long-term holders, there's basically 70% of coins haven't moved in the last year. You look at lost coins. Between that sort of liquidity they're talking about coming in, that's all the liquid coins there are. It's very bullish.
That's a really interesting point. Nate, what do you think, bro? How do you feel about the numbers? And
You guys are definitely more experts than I am as far as what the potential multiple is based off the amount of inflows. But I think it's entirely fair to think that from a conservative point of view, like this bull cycle, like 100K is probably the conservative low. And I think is potential on the bullish side, like upwards of 400 to 500K. I know you have some really interesting calculations you've done, Alex, based off where we're at in the market cycle, how long these cycles typically last from a historical point of view, and what the seasons are as you've come up with them.
yeah, absolutely.
Oh,
And by the way, so that was a
look at
really good feedback in terms of what is the actual liquid supply, right? Because some, like Bitcoin is so illiquid in the sense where less and less people are selling it off. So will there be enough supply if that's truly the buying pressure of today? But I think you're right. There's so many angles to look at it. What if the Bitcoin price goes up, right? All of a sudden, and there's more trading volume. Will that really impact each billion? Will really impact 10%? Probably not, right? So they may be vanity metrics.
Well, that's the thing. Like, yeah, exactly that. If the demand stays the same at any price, holy crap. And when you look at, say, gold, and there was demand, there's actually been more demand as the price has gone up. Like the inflows, like after a year or so, the first gold ETF had only had about $1 billion in it. It took 10 years for it to get anywhere close to what Grayscale's currently got. I think it's 2000. So it launched in 2004, 5 years, 2009, it reached the same sort of level that Grayscale currently has. Yeah, people say we might be laughing at 46,000 for a Bitcoin in a few years. Definitely doable.
Remember, we have a halving in less than 100 days as well. At the moment, all cohorts, including miners, exchanges, are on aggregate accumulating more Bitcoin than that's coming on every day. So there's 900 Bitcoin coming on every day, get cut in half to 450. So you're talking about, I don't know the maths off the top of my head, maybe that's an annual basis of $7 billion on $46,000 a coin. So yeah, you're looking at a reduced sell pressure massively, which is going to be huge in this bull run.
One of the things I was looking at today was like ETFs, and I really want to get into Alex's chart here, but Y has around $450, $490 billion in assets under management. No Bitcoin ETF could have that theoretically because there isn't enough liquid Bitcoin in the market. There's only between 300 and 550. It's somewhere in that range. I think what's going to be most interesting for me is not the first 6 months of these ETFs launch, but 1 year to 2 year, when that supply crunch really starts to hit. We've got 11 ETFs. When they've all start to get between 1 and 30 billion in assets under management, that starts to take a big chunk out. It had a look as well at the number of coins on exchanges. If BlackRock wanted to buy as much Bitcoin as it has gold, it would need to have to buy 25% of all Bitcoin on exchanges right now. Like, these numbers don't work for them in that way without the price going up a lot.
Yeah, there's less than $100 billion worth of Bitcoin on exchanges currently.
Yep, and they have about 50 billion in gold. I think it is 56 billion in gold.
Yeah, this just This is going to just take a couple of weeks, months to play out, I reckon. If that,
Yeah.
this could happen in days.
We'll see. So, Alex, tell us about these market cycles that you're thinking about. How do you think this plays out? And does any of this change any of your thoughts on it?
Yeah, it definitely is going to change, right? I think the reason why I looked into market cycles, by the way, guys, I just want to share this with all the viewers out there. And I'm sure a lot of people will feel the same pain because this is my third altcoin cycle and Bitcoin cycle, right? Since 2016. And what I realized is within the first cycle, you tend to get absolutely wrecked, like wreck city. I managed to invest, which was a lot of money for me back in 2017, roughly 10K USDT. That was a lot of money for me back in those days. And it went up 6 digits, right? It's crazy. I got really lucky with BNB just because we had a really good team at SwissBorg that was doing fundamental analysis, which was very unheard of back then in 2016, 17. So I managed to make 6 digits. But guess what, guys? I lost it all. I actually ended up with less than 10K at the end of the bear cycle, the long crypto winter. So I went up to 6 digits and I went back to maybe 9K, 8K, which was absolutely devastating. Right. And then the second bear cycle, which was, as you guys know, ignited in 2020 all the way up to January 2022, I did a little bit better, right? PTSD. I thought, okay, I'm not going to get wrecked this time. I got to take profits. And I did a little bit better, but still, it wasn't good enough relative to some people that I knew. So this time around, I was thinking, okay, I got to get this right, right? Like, it's not just about understanding what to invest in and why, but how to time it. And I think that is the most difficult question to answer is how do you time the cycle? Which, by the way, no one in the world will perfectly time. No one has a crystal ball. Markets, although history does repeat itself, it doesn't repeat itself. It does rhyme. So there are similarities. And for those reasons, I did it for my personal research because I just thought it's time for me to better understand cycles so I can time my investment. So if you guys don't mind, can I kick off?
Fine, go for it. Go for it. I'm excited.
Okay, so one thing to understand, guys, is that the first thing in order to understand market cycles, I think there are two people on this planet that really get it better than anyone else. And that's number one, Ray Dalio, and number two, Howard Marks. Ray Dalio really understands the economic cycles, he understands the geopolitical cycles, he understands many cycles outside of financial market cycles. So he's amazing. The guy I think who understands financial market cycles, or at least writes about it in the most eloquent and intelligent way, I would have to say is Howard Marks. So this is by no means comes from me. It's just research and trying to make this simple for everyone to understand and digest. So if you guys have a look here at the slide, I'm just gonna give you a quick rundown. And this is how I see it. So this is a traditional financial market cycle. We're going to look at more than just two bull and bear. That's overly simplified, but also a lot less complicated than some of the other market cycles, which are in 7, 9, 12 steps. That is overly complicated. So I want to find something relatively simple, which is the Wyckoff market cycle, which has 4 core steps. Now, why do I like the 4 core steps? Is because if we think about the seasonal cycles or a cycle that we're the most used to as human beings, that's probably the seasonal cycles, right? We have 4 seasons in some countries, 3, some 2, but everyone knows that there are 4 seasonal seasons in the world. And so the accumulation phase is what I qualify as spring. The markup stages, which you can break down into 3 subcycles, which will be early, mid, late markup stages, is summer. Distribution phase is fall or autumn, depending on whether you're British or American. And the 4th cycle, the markdown stages, which is winter. I don't know if this makes sense to you guys, but this is pretty much the easiest way for me to explain this to anyone that they'll get hopefully immediately, right? I don't know if you guys have any questions or if I should move on to the next slide.
No, I was trying to put you in the main thing, but it only wants to put me in here for some reason.
That's because you're so handsome, Liam.
I know, right? Maybe if I do this, there we go.
Awesome.
Still quite small though.
Yeah,
Right.
and so then now you
We'll go for this.
understand what and how many, and but now the next step is to understand what actions should we take, right? So why accumulation is spring is because here we're planting seeds. So we're planting seeds ahead of summer. And one of my favorite strategies for investing is dollar cost averaging. I don't know if you guys
Mhm.
saw this tweet, but it was absolutely mind blowing. I think it was Scott Melker, Wolf of Wall Street's. He actually showed someone DCAing from the top of the previous all-time high in Bitcoin price up until now, and you would still be up 2 times on your investment. If you DCA'd at the worst time, literally on the day of Bitcoin's all-time high, you'd still be ROI positive by roughly 2x.
Yeah, and
So
if you
anyways,
did have any other
yep.
financial asset, you'd be down currently.
If you do what? Sorry?
If you did the same approach with the S&P, Nasdaq, gold from their all-time high back in November or December 2021, you'd actually be down, whereas Bitcoin, you would be up.
Oh, very interesting. Because Bitcoin is the best performing asset. Is that why, James? Or
It's just how far it went down to how much it's gone up, where the S&P and gold kind of didn't go down or up that much. So it was just a really fascinating way of showing it.
that's really interesting.
Not to be a shill again, but this is just genuinely what I do. I've got my auto invest set up on SwissBorg, so I can verify that as well, because my account's done exactly the same thing and it's up. True
Amazing,
story.
brother. Amazing. So yeah, the accumulation phase, we're planting the seeds, right? Probably DCing the seeds. I think that would make a lot of sense. Then the markup stages, we're watering them. So maybe we're increasing our positions. Distribution stage, we're harvesting. So we're starting to DCA out. A lot of people see DCAing as getting in, but I think it's also a very good strategy for getting out, taking your profits. So here we're starting to harvest our crops. And then by the markdown stages, hopefully we can enjoy a delicious carrot soup. Do you guys like carrot soup?
Yeah.
Oh yeah,
Not
I'll
bad.
take some carrot soup, especially the orange. Orange for Bitcoin.
Exactly. Oh, you found that subtlety. That's why I was looking for the orange, actually, Nate. So does this make sense so far, guys, or am I telling you absolutely crazy stuff?
No,
No,
yeah.
this is fascinating. I like it.
You like it? Awesome. So this is how most cycles react. Now, here is the huge dilemma, and this is my super scientific finding, even though for most people it's super obvious. I'm not as smart as most people, but look at the crypto market cycles, guys. One thing that I noticed, and James, you're definitely the expert, and you too, Liam, you guys know way more about TA than I do. But when you look at the seasonal activity in the crypto market cycles, it's almost like we're missing fall. So the distribution phase, which tends to last between correct me if I'm wrong, James, 2 to 4, 5, 6 months, depending on the cycle, where Wall Street is dumping and all retail is buying, and Kramer is telling everyone to buy when Wall Street is selling. So essentially, you have some sort of distribution stage, which I qualify as autumn and fall. But in crypto, guys, look at this. Look at the crypto winter from 2017 Jan to all the way to 2020, literally overnight. Within 2 weeks, Bitcoin was crashing just like a depression, just like the dot-com bubble. Like the traditional markets may react without a fall, but only in highly extreme situations, right? Great Depression in 1929, the dot-com bubble, and maybe the great financial crisis, but usually it doesn't crash like that. And that is essentially, guys, is what I find the most fascinating, because that's the reason why we get wrecked. Because you go from summer where you're in heaven and you're partying it up, and you transition to winter overnight almost, right? And you go to hell. So anyways, I don't know if you guys have any comments on that. And James, would love to hear, Liam, your comments.
Yeah,
I want to jump in for you for a second, James, because it's something that James brought up the other day, which I thought was fascinating. Is James believes that the bull market ended in May in 2021, and that first dip is the start of the winter, and the rest was just money printing and leverage. And there is a lot of data to back that up, and I think it's a really fascinating concept that actually the on-chain metrics were suggesting that we were done by that point. That was our top, and everything that went after, even though we reached a new all-time high, was actually all, you can't call it fake because it was real. You could buy and sell spot Bitcoin at the time, but there was a lot of leverage in it, and it went down fast. And I find that fascinating. Don't you want to add any more to it, James?
Yeah, on Liam's point, so I treat the all-time high back in March of 2021 when we hit like $60,000, and then we were putting up interest rates at the end of 2021. The equities just pushed to an all-time high. Gold just pushed to an all-time high just after Bitcoin. But I was seeing addresses, transaction count, all the normal stuff that you would suggest in a bull market just wasn't there. So I actually didn't buy any Bitcoin from March, April, May-ish to about November. We also had the China mining ban in the summer of 2021 as well. So that also coincides with a Bitcoin capitulation. So that's kind of how I treat the all-time high in 2021. But also going back to your chart here, I have, sorry, I need to shut the door. You have different seasons. I have it by different cohorts. So there's Glassnode have a definition called long-term and short-term holders. A short-term holder is anyone that's held Bitcoin for less than 155 days. Long-term holder is anyone who's bought Bitcoin and held it for longer than 155 days. And the realized price is the average cost of all the Bitcoin that's been acquired. And you can see these clear patterns of euphoria, FOMO with short-term holders, because they're the new investor into the market. They'll speculate on price and they'll take the price even higher. So there was a chart I did yesterday with hodl waves at the top of each bull market at the peak. That 80% of the supply is held by these short-term holders because they'll hear Bitcoin on the news, they'll go in, buy. But by that time, the smart money, the long-term holders have already divested, they've already sold their Bitcoin into the bull market. So in the FTX collapse, in November 2022, I got and I usually get my trades wrong, but this one I actually nailed to the exact bottom because there were so many indicators that were going off. Short-term holder realized price was below the realized price, was below the long-term holder realized price, and that's where you get real depression. You can see the perps on the funding rate for Bitcoin were negative. I can't remember how, in terms of percentage annualized it was, but it was ridiculous. So there are like really obvious metrics to show when there's bull markets and when there's the depression of the bear market. You don't know how long it goes on for, but again, coming out of this bull market, the short-term holder realized price went above realized price and the long-term holder realized price. I don't know if you want me to show you this, Liam, if that helps.
Is that what you've got up on your screen?
Yeah. The last 5 years, but if we zoom in on the FTX collapse part, the red was the short-term holder realized price. And you can see that they go into the euphoria during the bull market, and then they end up at this depression level. When the short-term holder realized price goes below the realized price and the long-term holder realized price, and that gives you that bear market bottom. So you continue to accumulate at those levels. And then what was really interesting, if we zoom out, every cycle, because we're still following this 4-year halving, is the realized price needs to get above the long-term holder realized price and the short-term holder realized price for us to start this bull market. And in March, during the SVB collapse, we had the bottom and it hit the short-term holder realized price nailed on. You then had the smart money buying it that went above both realized price and long-term holder realized price. And then in July, I was actually calling for the start of a bull market. But you can see here that the orange line, as in the realized price, didn't get above the long-term holder realized price. And then we actually went down. So that was a fake out. And I thought, okay, we might go above it. But in November, you can see that the orange line goes above the blue line. And that was the confirmation of the bull market. And you can also see the red line is going parabolic. And that is the euphoria, the FOMO.
Brilliant. What do you think, Alex?
Yeah, it's super cool. As James was saying, I think one of the largest debates is to understand like what truly was a part of the bull cycle, what was a part of the bear cycle. The way I cut the line, essentially, Liam, was I draw a line when there is a double bottom or when we reach the ultimate all-time low, and then when we find the next new support levels. So right after the all-time low. And the reason why I do that, because I believe that once you find an all-time low and there's a new support level, that's a transition into a new stage. So so I cut it very simply. You can see here, right? It's usually right after it bottoms out and then there's strong support. Maybe it's not perfectly done. The lines are not exactly traced but I think the most important thing, like regardless if you see the end of the cycle in March, April, May 2021, I think the key point here is literally going back to the seasons. There's no fall, guys. Go look at S&P 500. Go look at stocks. The distribution phase is at least 2 to 3 months. Sometimes they last a full year. You have a full year of distribution phases.
And I think what's really interesting, Alex, because you're talking about what humans are used to. Humans aren't used to looking at on-chain metrics that James just showed. 0.1% of the world's population don't even understand those charts, whereas a lot of people understand the price charts that we're looking at right now. And even if there's a fall in the on-chain metrics in a really obscure way you can look at, which there isn't still from looking at what James just said, the actual price, you're right. Where's that cooling off period? It just drops, doesn't it?
Yeah, we're not getting a cooling off period. My only base case is that we do get some form of mild recession this year. Like, again, today we saw the inflation reaccelerate, which is what I have been calling for a while, even though we might be in this disinflationary trend. So that could be a caveat with rates rising. Rates are going to stay elevated for as long as possible till a credit event. And I believe Bitcoin is not correlated to interest rates. And like we're seeing today, there's so much kind of panic because Bitcoin's not going up on this ETF demand. And I just don't think people really have a clue on this asset. And I just think this is just going to, everything just takes time. So we just need time to be the barometer here.
I was just going to say, I think there's a couple of ETF issuers that do get it. I've been really impressed with Van Eck, and I've been really impressed with, as always, ARK. I think they really get Bitcoin, and I'd put my bets on them to be able to handle this better than some of the others. They're my kind of outsized kind of issuers to do well on this. Sorry, go on, Alex.
No, I was just going to say, so my first point is like within these 4 cycles, right, in crypto relative to traditional financial markets, either we don't have a fall or autumn at all, distribution phase, or it's really tiny and really resembles the massive bubble bursts or the massive crises. Because within 2 weeks, 3 weeks, 4 weeks, the drawdown that we get, literally, I saw a report the other day saying that the drawdown that we get in Bitcoin is the second biggest drawdown and the most brutal in all financial history after the Great Depression. When Bitcoin goes down, let's say 88, 90%, the Great Depression, I think it was something around, was it 92, 93% in the US, James? Something like that. So it went, there was one cycle where the drawdown was lower in traditional finance. And Bitcoin had the longest bear markets besides the Great Depression as well. The Great Depression, I think the winters or the bear cycles, I think the longest was 2 years and 9 months. So longer technically than our crypto winter.
Yeah, Bitcoin is one of very, very few assets that can have these. We've had 4 drawdowns now of 93%, 85%, 80%, and 75%. And then, well, we're going to see it hit its all-time high again. Amazon did it in the early stages. So yeah, only very few assets can manage to do this. And a lot of people will compare Bitcoin to like the tulip mania phase, where we were looking, me and Liam, and like the tulip mania phase lasted literally 12 months. So people will try and wrap a narrative or try and put Bitcoin in a certain box, or if the price goes down, they'll try and attach a narrative to it. But sometimes there is no narrative to it. And that's kind of what I was trying to do today. And Liam was actually right thinking about it, that I'm saying Bitcoin's going down because GBTC must be selling. But that's probably not the logical reason. And like, it's probably people just have to take time to understand what's going on.
So trivia quiz for you guys. The second takeaway from this chart that I can see is the bear cycles are getting shorter whilst the bull cycles are getting longer. So we can see that it's getting closer and a bit more similar to maybe what we would see with equities and stocks. So I have a question for you guys. Do you think this bull cycle will be longer than the previous bull cycles? The second question, sorry, I'm going to hit you hard. Will we have a fall in autumn? So will summer be longer, but also will we have an actual distribution phase? Will it start to resemble more stock markets? Sorry, 2 questions for you guys.
I think I'm with James. I think bull market started in November. I agree, because we've got the halving, we've got ordinals, which are pushing up transaction fees, which is making miners more profitable. Yes, it's cooling off a bit recently, but I think BRC20 tokens and NFTs on Bitcoin are only going to increase, which is going to make the network more congested, which is going to make the fees go up, which is going to make it more secure. There's all these aspects that TradFi just don't get about Bitcoin. The fact that there's not enough coins in the market for the liquidity, they're going to get shocked when they realize you can't figure out and open a new mine somewhere and go and create more Bitcoin. It just doesn't happen. I think the bull market, I didn't think the bull market was going to start before the whole ETF thing until the end of this year at the earliest. I thought that's when we were going to start hitting a bull market. So I think if we're already in the bull now, we've got at least 12 to 18 months of good times ahead. Lots of ups and downs, not up and to the right. I think looking back at that gold chart that I showed, I think is very indicative. I think we could go down for the next sort of 6 months and still, in my view, be in a bull market, given all the development that's happening. I think we're going to have this really interesting phase of usually bear markets are for building, but I think we're going to be building through an early bull market, which is going to help reinvigorate the bull market to be even better. I think that's going to be the most exciting thing about this cycle, that people are still building, going to be doing amazing stuff, but Wall Street is going to be helping us with the price. So people will be able to pay developer salaries at a time where they usually can't afford to because they're in a bear market.
Yeah, I believe that the cycles are getting longer. There are a couple of theories that I think do get debunked this cycle. Liam and I talked about this one. I believe we will hit an all-time high before the halving, which has never happened before. And I also believe that the diminishing returns theory of each cycle will be broken to the upside for this cycle as well. So if I'm thinking that the cycles are getting longer, Liam said, yeah, we've got 18 months of a bull market. Nothing ever goes up in a straight line. You will get that bull market corrections up to 20, 25, 30% drawdowns, but ultimately it goes up. And I think from the cycle low of $50,500, I think we could hit roughly 3,000 to 4,000% higher from that number. So I see by Q4 of 2025, the bull market top.
Yes, you see that? You guys see my little prediction, which is drawn outside of the chart? I put between 12 to 15 months, but you guys said up to 18. So we're in agreement. Woo!
Yeah, definitely.
Yeah.
I mean, your price goes up to 3.5 million there. So I agree with you on that. I want that.
Yeah, I'm not there yet. But what's interesting was I was actually watching Bloomberg yesterday, and the host was...
that's market cap, sorry.
Yeah, it's for the total. It's not just Bitcoin. Yeah, it's total crypto assets, market capitalization.
Okay. That makes more sense.
Why I think we hit around the $500,000 price mark, which is currently and that would have a market cap of around 13 trillion, which is what gold is. Obviously, gold will go higher. Is the watching Bloomberg yesterday and the host being like, we don't really understand it, but we're drilling this digital gold narrative. So I think Wall Street are just going to be buying into this digital gold narrative, and that will take the price to that kind of level. The next cycles, if we even have cycles after that, but I do believe this is probably the last kind of 4-year.
That's crazy. So if Bitcoin reached $500,000, sorry, so that would be roughly, is that like a $6 to $7 trillion market cap, or?
I believe it's 13 trillion.
13 trillion dollar market cap.
Yeah, it's like 500K per Bitcoin, I think, to reach the relative current market cap of gold.
Because right now today, it's one Bitcoin is $1 trillion, and it's roughly around the 50K mark, right?
Yes, just over 50,000 for the $1 trillion asset.
So you're right; it would be 10 trillion plus, right, in terms of market cap.
9.79 trillion.
Okay. Yeah, so that's kind of the bull market, the barometer I'm looking at there. But obviously, gold will inflate higher. But it's capital rotation as well. Is gold going to go down short term? Equity is going to go down short term into this rotation into Bitcoin. That's another thing that we've all got to be looking out for. But there's definitely enough money in crypto and through these ETFs that can send Bitcoin to an all-time high before the halving easily.
That would be crazy. That would be crazy. I think my table here, I should maybe delete this slide because it's probably way too conservative.
500,000. So that's the thing. If it might peak at that, but then we drop down to 200 something thousand with a drawdown.
Yeah. So like the realized prices, and if people will go back to like 2017 and be like, oh, Bitcoin hit 20,000 and it was only 26,000 in October 2023. No, it was 20,000 for 8.5 seconds, but it was really like 7,000, 6,000 for that kind of bit of the cycle, which is the realized price metric. So yeah, our realized price for this cycle is above $20,000. So we continue to make higher highs.
The other thing that I want to know from you guys is, do you anticipate the Bitcoin's dominance to go up or down over the next 12 to 18 months?
That's a really
I
good
think
question.
it goes back down again. I think it's probably close to peaking. It usually peaks just before a halving historically. It dropped dramatically the other day or yesterday on the ETF news with Ethereum starting to gain ground. ETH is the best performing asset at the moment. Last I looked, yeah, it's up 13% over the last 7 days. Bitcoin's only up 5%. Obviously, you've got the ETH ETF narrative coming in now, but a lot of the institutions have also talked about 2024 being a big year for Ethereum and I think it makes sense. I think once Bitcoin's it's got in the door as an asset, I think that's when then the whole Web3 narrative then starts to become something that people can look to entertaining as something a bit more serious. And I think that's when Web3 actually starts to deliver on what it set out to be. I think calling it Web3 as early as we did maybe made it a bit difficult. I've heard people talking about AI being the true Web3, which I thought was a really interesting concept. Maybe actually what we're thinking of as Web3 is actually Web4. Maybe we jumped the gun a bit.
Liam knows my answer to Bitcoin dominance, so I won't have to say it.
Please tell us, James. I want to know. I want to hear.
Number go up.
Yeah, I think it goes higher. I think everyone underestimates the environment that we're going to go into. I think high rates, high inflation, and I think money is going to have to go into assets that preserve wealth. Yeah, there's probably loads of capital out there for investing in Web3, crypto. I really don't think Bitcoin's seen anything yet. So I expect dominance to go way higher. But I also think that even in theory, I don't understand how an ETH ETF would work with the staking per se. But if BlackRock filed for it and their record of 570 whatever to 1, it's going to be a win. But then again, it's the free market. If you've got on your brokerage accounts an ETH ETF and a Bitcoin ETF, like for me, there's only one logical answer. But again, that's what the beauty of a free market would do.
So this is the Bitcoin dominance with the halvings marked in. The purple lines are the halvings. So you can see, obviously, this one doesn't really count because Ethereum didn't really exist at this point. Ethereum comes in here. So then the first halving afterwards, it drops massively with Ethereum starting to take dominance and all the other ICOs appearing. But then after we hit the all-time high, it's the inverse of the Bitcoin chart. It then rose during the bear market. We had a halving. It then drops again. November time, it reaches its low. It's currently on the way up. So if you were to take the Bitcoin dominance against halving metric, we are not yet in a bull market because the bull market comes after the halving down here. But then, as James pointed out, you've got the realized price, long-term holders, short-term holders, suggests we are in a bull market. That's why I love Bitcoin.
I think in 2016, when Ethereum started and that bull market outperformed Bitcoin, in the 2017-18 bear market, the 2017 bull market, Ethereum outperformed Bitcoin. 2019 bear market, Bitcoin outperformed. The bull run we had in 2021, Ethereum outperformed. But I'm now going to say that in this bull market, Bitcoin will outperform Ethereum. I have a chart to show it, but we can carry on if you don't want to see it.
We're way over our anticipated length of the episode already. I think at this point, has anyone got any other sort of thoughts they'd like to put out there for this historic day? I think should we just pull up the price chart for the BlackRock ETF again, so we can look in awe.
What's the price of Bitcoin now?
45.9 is what I see it.
But we can't have a weekly price. Still well above its launch price. I think that's how I expected it to play out, in all honesty. FOMO at launch, it reads like a traditional tech stock that is up pre-market. If a tech stock's up pre-market by this amount, by the end of the day, it's up a conservative amount, which is what? It's up 7% from when shares were issued. So BlackRock is currently up 7% on that $10 million that it seeded.
And then they've got to go into the open market in a couple of hours and buy.
They'll have more money than the Bitcoin's worth, kind of thing. They'll have made 7%. So maybe they buy 7% more. It's the authorized participants like JP Morgan and people that are going to be buying it. Let's see. It's fascinating.
Alex, what do you think about the possibility of Bitcoin dominance rising over the next 12 to 18 months, or do you think it will fall?
No, I think it's going to fall, man. Fundamentally, Ethereum on most days is generating more revenues than Bitcoin. The Bitcoin network is. The Bitcoin network is averaging anywhere between $3 to $4 to $5 million on a daily basis of pure fees distributed for the miners. But Ethereum is already making $6, $7, $8 million, and we're still in the early stages. There's more Ethereum developers, also full-time, part-time commits. So I don't think that Bitcoin will be able to hold its dominance. And of course, when you look at the chart, it's just having lower lows and lower highs and lower lows. However, I do think that Bitcoin will, of course, it will be the longest living asset amongst all, while others will die and eventually be caught up by technology. I think it has the longest potential in the long run before we have some sort of grassroots bunch of bros, privacy activists who really built something coming from the most ethical, most principled values that you can possibly have, right? Yeah, I don't think that Bitcoin will necessarily be the here in 100 years. I think hopefully, I hope that mankind will create other amazing people who will really be there as selflessly as possible to recreate something with new technology, but with the same grassroots vibrations and intent. But yeah, long story short, I don't think it will increase its dominance. I think it's going to drop, as we saw on the chart. I think it's going to drop to like 25% in this cycle, maybe 20%.
I wouldn't be surprised if we see a new low for the dominance at some point in this cycle, personally. I think the opposite. We need a bet, James. We need a bet going on.
I would definitely take the over on that.
I will take one Satoshi bet.
One Satoshi bet for the Bitcoin dominance, yeah?
Or one yen bet.
Okay. So the previous all-time low was 70. It was 30%, right? Was that the previous all-time low? Was it roughly 30% dominance? Is that what it is?
Wait, so you think it's going below 30?
I think it'll be around 25 to 28. Yeah, I think we're going to hit new lows. Just because there's a lot of technology, as you said, Liam, there's AI, there's lots of technologies that are coming in.
Do you know, just a quick question, do you know how many coins have reclaimed their all-time high in Bitcoin denomination?
I do not.
I would guess probably 0.
One, and that was Dogecoin, because Elon Musk pumped it. So I'm more than happy to take the other side of that bet.
That's my thesis long term too, is that price against Bitcoin, everything is going to go to 0. Every asset.
Yeah, but I do have an issue with market cap as a barometer, because even like when we saw FTT and the market capitalization of that, I think it hit like 50 billion. Market cap is actually a real like fugazi as a metric. If you look at realized cap as a barometer, Bitcoin's at about 60-62%. So I'd go off realized cap and not market cap.
And be clear, from my point of view, I do think that Bitcoin dominance is going to go down, but I don't think that it's going to be weird. Like, its role in the marketplace, I think, is actually going to go up in a lot of ways. It's still the only crypto that I am purchasing on a regular basis. Actually, no, I've started DCing into near, actually. But other than that, like, Bitcoin has become my biggest bag by a long way, bigger than it was last cycle. I just think the market overall is going to get bigger. I think that's it. I'm going to like tokenization and decentralization as a narrative is way bigger than the several $1 trillion that we've got right now.
Listen, guys, if someone wants to bet at 30, I say 30% Bitcoin dominance, I'm happy to put 100 quid just for fun and giggles.
Sounds good.
Okay, James, the bet is on, my friend. And speaking of bets, like for my kind of final thoughts, like in terms of how long this cycle will be, we talked about a range between 12 months on a conservative level, 18 months on a more aggressive level from this point onwards. And I think that's really important information for those watching out there, because once again, we don't want to get wrecked, right? If you're playing with other low caps, let's say micro caps, nano caps, you got to get that back into BTC, DCA that out as much as you can. I think that's one of the biggest lessons we've learned today, because it's going to be summer, winter, overnight, guys. Hopefully there'll be, we didn't really talk about whether there's going to be a distribution phase or a fall or autumn this time around. Perhaps, hopefully, a little bit more closer to the traditional financial markets. But then for me, in terms of price prediction, on the next slide, I had total market capitalization. I'm a bit more conservative, but I see it between 5 trillion to 8 trillion. So if Bitcoin by the end of the cycle is 50%, has 50% dominance, then it would be around the $4 trillion. So I would say 4 times up from this price. So an aggressive, in terms of aggressive predictions, I would say $180,000, $190,000, and on a conservative basis, I would say $110,000 to $120,000.
Sounds good to me. Sounds good to me.
That was a great chat, everyone.
Yeah. All right, brilliant. Should we call it there then? Thank you, Nate, as always, for co-hosting. James and Alex, it's been a pleasure getting your thoughts and your concepts went into this. We're going to split this up into some shorter videos because we're pretty much going to hit about an hour by the time we log off. But yeah, Bitcoin launch, ETF launch day, wrap.
Cheers, guys.
Cheers, Liam. Thank you.
Yeah.
Cool.
Thanks so much, Alex.
Comment, subscribe, all that good stuff, wherever you're watching this. See you next time, guys.
Yeah. Take care.